All right, good morning, good afternoon, good evening. Justin Clark here. Going to do a quick morning market analysis here on the crypto markets. Going to take a look at Bitcoin this morning and see what's going on with that. Because for those who are new here, Bitcoin's a big bully in these markets. So whatever Bitcoin tends to do, everything else tends to do. All right. So as you come on, if you want to say hello, let me know who you are, where you're tuning in from, and then we'll also field any questions. If you got any questions, just pop them in the chat box. And again, if you want market analysis like this pretty much on the daily, follow me on Facebook or x.com or subscribe to our YouTube channel. All right, I'm going to share my screen here, and we're going to want to go over and look at what's called the MA momentum, moving average momentum chart setup. Hey, Troy, good morning. Welcome. And let me go ahead and share the screen over here. All right, so if you are a member of iCoinPro, you can click on my iCoinPro training and then go to the micro profit system part 3 and hit go and click on MA momentum. It stands for moving average momentum. All right, and we're going to cover what that is. But if you're a member of iCoinPro, you can do that training pretty much at any point. It's like a 40-minute training. And let's go over here. We're looking at our software right now. This is the iCoinPro trading portal. This is our custom software we built to trade our strategy pretty much from the ground up. Nobody else has this type of software. It's like the all-seeing eye of crypto. We know when things are dipping, when things are blowing up, and when things are dumping. So click on load chart layout and click on MA momentum to bring up this chart setup. And then we're going to click on expanding the screen. So for those who are new, these red things and green things are called candles. They show where the price currently is. We're looking at one-day candles. So every candle here is an entire day's worth of trading. These lines here, this purple, maroon, yellow, etc., these are called moving averages. And they show potential areas of support or resistance for a coin. A lot of traders use these. So we use a mixed bag of a whole bunch of them to kind of get an idea of where other traders might be wanting to buy or wanting to sell. And then the shaded area is called a Bollinger Band. Now, quickly, when the price action is trading above all of these moving averages, in particular starts trading above the light purple moving average, that means that we're potentially in a bullish market and almost definitely not in a bearish market and building up potentially bullish momentum. Now, on the flip side, when we start trading below all of these moving averages, and in particular get stuck below this light purple moving average, on the downside, we are potentially in a bearish market and almost definitely not in a bullish market. So we have to kind of process out the fear of the sellers to then make our way back to bullish again. So where are we right now? Well, it's not great. We don't really know what's going to happen next. We went all the way down to under 80,000. We're trying to get above. Oh, I got alerts going off. We're trying to get above this yellow moving average right now, which is sitting at about 87,000. So yeah, pretty much 86,000 is the key area to start trading above. Looks like we're getting a little pullback or rejection here. But as you can see, we were trading in this range and now we've moved to a lower range, right? We were trading in the range of about 90,000 up to 110,000. Pretty good range there, you know, $20,000 range in price. And now we are trading below 90,000, and it looks like the current floor is about 78,000-ish. So we need to reclaim 86,000 and, you know, trade above it to then potentially try to make a move to get back above 90,000, which would be really key. If we keep creeping lower, that's not great. Obviously, people could interpret it as a clear rejection at this moving average, in which case the next lower one is, we're going to say, around 81,000. If we lose 81,000, then we could re-challenge this low again. But overall, not awesome, right? We're starting to trade below and we're bouncing, but we're also looks like we're struggling here to get above. So anyway, all right, key levels. Got to get above 86,000. Got to stay over 80,000. Otherwise, we run the risk of potentially moving lower, is what I see. And reclaiming 90,000 would be the cat's bananas for the buyers. They would be super excited about that, especially if we did it quickly. But if we don't, it's just going to sow more seeds of doubt in people's minds and potentially convert more buyers into sellers. So, hey, Dennis, good morning. All right, let's take a look at what we call the longs and shorts. Well, we don't just call it, everybody does. All right, so longs are people that are betting that Bitcoin's going up, usually with leverage. Shorts are people that are betting that Bitcoin's going down, usually with leverage. Right now, when people are doing leverage trading, it means that they're borrowing money to exaggerate their gains and losses, okay? And they can blow out their accounts. If you've ever heard of somebody in trading blowing out their account, it's because of leverage, essentially. So right now we're at 61% long ish, 61 and change, 38 and change short. We're not super concerned about this till it goes over 70%. We've been moving slowly lower, but we have not had like a selling crescendo that could potentially, like if we're starting to make a move, right? If we're starting to make a move down and we're trading down, sometimes these things can build up momentum and then end in a selling crescendo, which is the buy signal, for people to buy and hold a little bit longer. How long, I don't know, but a little bit longer. And again, we don't trade that way. I'm not giving investment advice or anything like that. We have a very specific way that we trade. You can do our free boot camp, get back with the person who introduced you to iCoinPro or shared this video with you. They will get you that boot camp, or shoot an email to support@icoinpro.com. But if we keep creeping lower and those longs go over 70%, we could still set up for what's called a long squeeze, which is a more dramatic drop in price. Good examples are here, where Bitcoin's price dumped. Well, that's 12%. That wasn't even too exciting. March, one of the best, most notable examples was when we had this drop here on March 12th, 13th in 2020, 50% drop in a day, essentially. And that was the mother of all long squeezes, one of the worst ones ever. But anyway, we could be building up to that selling crescendo here if we don't start getting some movement back up. All right. So we'll just have to see what happens here and keep a close eye on those longs. When they get over 70%, we get, very cautious in our trading and worried about a bigger dump happening, which really isn't that big. Honestly, we love it. So, I mean, yeah, bring it on, dude. Let's long squeeze all freaking day. And we'll trade those dips and rock them in and out, do really well. So again, trading has risk. You got to learn how to trade. Again, we have a system for it. If you follow it, we believe you're going to do great. But if you just randomly buy, you can just, it gets so painful. It's so bad. So yeah. Anyway, yeah, if you're listening to that Twitter influencer who's telling you when to buy and sell, believe me, everybody's a genius in a bull market. We'll see who survives the bear market if that's what we're starting. All right, last thing, let's look at what's hot and what's not to trade. So, all right, we've got Fort. Again, a little bit low volume, pretty good movement, some good noisiness, maybe small positions. Peanut is a meme coin. I know. Let's get into Cato. Cato's been maintaining volume. Cato, it's not moving super crazy right now, but it's, in my opinion, I like it a bit more because of the overall volume. So Cato, Peanut, small positions. It's this meme coin about that squirrel. Yeah, I mean, again, okay, here's the thing. Cato is the one that I'm watching. I'm also watching pretty much Cato today. if Peanut or Fort do really extreme movements down, then I might be interested in trading it. You know, big dumps, great roller coastering, everything. But otherwise, Cato is the only one that I'm kind of watching more intensely. But we'll see. I mean, the market could get shaken up tomorrow going into Monday when the traditional markets open up, especially with us, with having a Friday. Let's see, what day was Friday? So Friday was the 28th. So this was the 28th. Usually when you have a bad close on Friday, in traditional markets, they interpret that Monday can open following the trend. Do you know what I'm saying? So anyway, we'll just see how things shape up when we start the regular trading week tomorrow and all traders return. And we'll see what people think are going to happen then. But again, Cato's the only one, and then Peanut and Fort on bigger movements because of the lower-ish volume. All right, everybody, that's all I've got. Again, if you want to learn how to trade these crazy crypto markets, go ahead and go ahead and do our free bootcamp. You can shoot an email to support@iCoinPro.com or get back with the person who introduced you to iCoinPro or shared this video with you. And if you want to get market analysis like this pretty much to your inbox on the daily, follow me on Facebook or x.com or subscribe to our YouTube channel. All right, everybody, have a wonderful rest of the day. And let's see what happens. Let's see what happens here today and going into the new week. Bye-bye, everybody.